All right. Hey, everybody. DayTraderRockStar here. Well, a great video coming your way on futures trading. This video is going to tie in a lot of great stuff. I do a lot of coaching. I do a daily show. We trade live with our members every day here at Day Trading Radio. I'll kind of introduce myself in case this might be a new video for you. I'm always expecting the same people to be picking up with the education, but sometimes I have to kind of go back and kind of get people onboarded so they understand what's going on. Yes, I run Day Trading Radio. We've been on the air broadcasting the markets and trading since 2007. I started trading in 1996, went full-time trading, and then started teaching trading again when I started the show and stuff. And that's basically we have a great community of traders all at Day Trading Radio. I teach a methodology of trading that's based off of scalping using stochastics. Stochastics are a indicator, an oscillator that measures momentum. I'm not going to go into too much because I have all that information on the site if you want to learn about stochastics and stuff. This video is not about that. I do have hundreds of videos on that, what a bearish stochastic is and what a bullish stochastic divergences and all the methodology. But, this video right here, hopefully you can go back and get yourself a little bit more familiar with the methodology. Is going to tighten up what you know. All right, it's really going to put things into. And what I wanted to do is actually, I have these new slides and I'm putting out. It's kind of an update to the methodology overall and talking about how to really time your trades to a point where everything is. You just have to check off the boxes. And if you could check off the boxes on each one of these setups, you're going to be good to go. The hardest part, of course, is going to be waiting and having the discipline to not trade other than these setups. All right, that is the biggest issue in trading, is trading things that are not falling into the criteria of the super signal or these are really great signals. There's a lot of stuff. So I decided today I would we basically know the methodology, and I'm going to put it in a nutshell. And I want to make it so basic, all right? So you get a good feel what we have to do here, because too many people are trying to they put it under the microscope and ends up being a little bit too overwhelming. And it doesn't have to be that overwhelming. There's just a few important parts to the method that will make you successful. And this is what I want to kind of go over today. What makes this method successful, and what should you pay attention to without being overblown with all this information? There's a lot of technical information and stuff, but this is really basic, easy to understand method. It's up to you to apply it and be there for it. Well, there's a lot of things I have to say, and I preach this in every one of my videos. Every single one of my videos is that you have to have the discipline to be there trading. These setups are going to come around, but they're not going to always be there when you're there. If you might be sitting in front of the computer, and I just talked to someone, I just did a coaching session just yesterday, and this is what happens. That's why I wanted to do this video today. What's happening is a lot of people are trading around their lifestyle. Oh, I'm taking care of it. I want to take care of this. I got to do this. I got to drop the kids off at school in the morning. Then I have my work, and then I'm going to sit down and I'm going to trade a bit. And then in that hour or 2 hours of trading, or 90 minutes or whatever, they're trying to trade and make money. And the system, which works so good, will work great if the system triggers. But if it doesn't trigger, you're sitting there waiting for something to happen, and then nothing's happening. You're going to end up taking trades that do not fit the criteria or not give you the probabilities of success like you would have. Just like counting cards. This has a lot of game theory to it. Basically is when the things line up, and we know when everything's lined up. I'm kind of going to explain that to you in a basic way so we can kind of catch some people up. But the methodology is we're going to be trading a time frame. Our trades, if you're interested in learning this, what I would say is you got to have some time to put into the market. I made this new slide, and I said, I've been preaching this. This is kind of something I say. You can't trade around your life. You must design your life around trading. And for this type of methodology, you might be saying, "No, I can't do. That's not who I am." That's fine. You're going to do what you're going to do. I know what works. I know what it takes to make it work, And not anyone's going to be able to do it. It's just too hard sometimes to be that disciplined with other life you have to make sure you're at the right time in your life to be able to put the time in. Doesn't mean you can't do it. It's just saying that make sure everything is in your favor when you do try to trade and make money trading, which is a very hard thing to do unless you're investing and going with the market. But if you're trying to come in each day and make money out of this market, if it was so easy, everyone would be doing it. But it's not. It's not easy. All right. But this is an easy part of doing it, but most people can't do it because they can't afford or don't want to wait at 740. All right, we have a 740 setup. We have a little divergence there. I teach that all the time. It's on the lower trend line. That's our trade. But maybe you're not at night, and now you come in at 820. Or you're sitting here at 820, and you're like, all right, now I have to wait. I have 1, 2, 3. Now I have to wait for inside the channel and the divergence. So you're not going to take everybody sitting here. This is a setup right here. This is a setup. Oops, there it went. So that's something that's easy to understand and see. I could see that from that 1, 2, 3 channel. As long as I'm inside the channel, I'm looking for a divergence. If I have a bounce and we're oversold here on what we call a quad rotation, see, all this thing rolls off my tongue because I do it every single day and I know what I'm looking for. And that's what you're going to get to a point. You're going to get to a point where you have the recognizable channel. You need 3 pivots to do that. Once you have a recognizable 1, 2, 3, 1, 2, 3, 2 on one side, and 1 on the other side, you drop the trend line there, you make a parallel trend line, you put it to the low or the closing price. Really depends. I just throw it in there close to the next, because it did overshoot here. And lots of times when you have a big down candle and then a big reversal candle, you don't really count those candles. They cancel each other. And that's why I call them canceling candles. You go back to where that other one closed out. And then sometimes you actually see, that touched up here, it would have touched here. It makes sense. And then whatever happened here usually is a flush or something kind of breaks down through a trend line here. I'm not worried about the trend line break here because there's just a lot of things. Sometimes you have volume, there's not liquidity, there's reasons, but they always come back and then retest. But the fact is, we're looking at a divergence in a way that we have to really see the divergence. We have to have that divergence, and it has to happen inside the channel, and it has to happen right after the quad rotation. So once you get that quad rotation and you have that low, and you're like, all right, I'm inside this 1, 2, 3 channel. We're down here. We have a quad rotation. Do I go long here? Some people might even take a long into this. I'm a divergence trader. The long is not guaranteed to give you a big long. The divergence will give you a big long. But lots of times the market will come down, it'll bounce. And at this point, when you have a quad rotation and you're focused on this, and when I say quad rotation, that's one of the major things of the methodology that keeps you out of the trades. Now, let's go back. I get all over the place. I get super excited about this because I want people to understand there's a huge opportunity, all right, for you if you could pull this off, all right. So we're looking at a time frame inside of a trade. I want to jump all over the place. I want to try to put you in a position where if you could do this or not. Are you able to put that time in? So if we're looking at trades 1 to 5 minutes in length, that means you're going to get in, and within 5 minutes you're probably going to be out. All right. Now that's in a nutshell. That's something I want you to hold on to. I don't want these trades. I think we're going higher. I don't want no thinking involved in trading. All right. I want this. This is a methodology type of trade where everything has to line up perfectly. You're going to get a reaction, and you got to take that reaction, and you're going to take it off. That's your best things. You could anything more is gambling if you think it's going to go higher or you're going to be able to hold through a pullback. Don't worry about it. You'll understand. In the long run, you continue to take profits that'll outweigh how many times you would have left it on, it would have ran. Because most of the time it will come back and get your stop and eat into your profits. All right, but typically 1 to 5 minutes, but it could be longer based off the 60-10, which is our 5 minute signal, basically, our 5 minute signal, the 60-10. That might be Greek to you out there for the first time. You might be watching the video. Now, the 60-10 is a stochastic band down here. I have a 9-3, I have the 14.3, the 44, and the 60.10. And the 60.10 is representative of my 5-minute time frame. And then don't let your head blow up here. The 60.10 is representative of the 5-minute time frame if I ran it on the 5 and used the 9.3 on that. So it's the 60.10 is like using the 9.3 on a 5-minute time frame. It would be over. So we know that the 9.3, the reason that's significant, the 9.3 and the 14.3 are pretty much standard defaults or benchmarks in the industry. So when people apply this to it, they apply it on the 5-minute time frame, they use the 9.3. They apply it on the daily, they use the 9.3 and the 14.3. These are the things come defaulted on most trading platforms. I've adjusted the parameters here to kind of mimic different time frames where that converts over from looking at the 1 now. I could look at the 5 just by looking at this and seeing this low here and this low here and this low here and this higher low here. This is a huge 5-minute divergence. It's a 5-minute divergence. Now, you could to show you that, just show you that fast. Let's see what I could do with it. Let's bring this up on the. Let me see if I have a chart over here. Bear with me, please. All right, this is like Friday's charts. This is the 1-minute time frame, and then we're just going to go to the 5-minute time frame, and that was right at the open. So right here. So we have a low, and we have a lower low on the 5. But look at the 9.3. Look at the low and the higher low. This is a huge, and look at the move we got off of that. And I was surprised. I remember when we were trading this, I was really surprised on the strength. It had tremendous strength all day. Went up 100 points off the lows. That was over 100 points. Anyway, that divergence here is that's where you make your big money. Is that 5-minute time frame. If you get a nice divergence, you get these nice things. So that gives you more reason to be in a stock longer if your 5-minute gives you, that 60.10 gives you that setup, which was right here. That's a huge, huge understanding. When we sit down you sit down in the morning, and even overnight, which I love the overnight trade, I think you could trade just as well overnight. You're still looking for that divergence here, that low. You're looking for that 1, 2, 3. Once I have a 1, 2, 3, I have a 1, 2, 3. I could either do it this way. Let's give you a fast example of what I start to see. 1 to 5 minute typical, could be longer based on key requisites, channel identification and divergences, meaning that's what I really want you to learn. If you're going to learn the fundamentals, start learning how to recognize a good channel. And that's what I teach. I teach a system of recognizing channels that there's nothing better out there. I approach it, and I teach it in a way that it becomes very easy to understand channels before they even actually complete. So you could actually kind of almost guesstimate where the channel is going to start or how it's going to set up just by 3 pivots. Very simple. The trade must be in a channel to always start. So once you identify that channel, that's why it's so important. The channel is going to give us a lot of things. It's going to give us the directional trend. All right, it's going to give us a range. All right, and it's also going to give our entry zone because we don't want to be outside the channel when we enter our thing. So it's a good indication if you just happen to find yourself outside the channel, then you have to think twice about, especially if you're in a downtrending channel and you're going to go long, you don't want to be already outside that channel going long. And this is the new stuff here. This is the really genius stuff right here. Focus in on the individual candles. Oh, see that? I'm just doing it free with you for the first time, so I might have some typos and stuff. Usually 4 to 7 minute candles that start to hold the closing price lows of those candles. So what do I mean by that? And this is what I really wanted to kind of go over today. Now we go back over here. This is what I typically. When we sit down, there's always going to be some future. Like if you get up Monday, you're going to have the Sunday night. So I'll get that. I'll just go back, and what I'll do is I'll look at the chart. I'm sitting down at my chair, and I'll start looking at the charts, and I'll just put in some rudimentary channels, especially if I see 1, 2, 3. I'll usually start it there. And even if I see it's going to break down, that's fine. This is probably some overnight news that was happening. The volume was piking. But I want to have these original lines up here because what happens is, look at this. We actually come, look at that. We come right down to that line. That's in the downtrending market, the downtrending channel. We're not concerned about the top trend line as much as we're concerned about the bottom trend line because our entries are going to be at the bottom. So even if it breaks out here and comes back down, I'm not really worried about all the slop up here. I really want to pay attention to the lower trend line. And on the upper side, the rising trend line, I want to pay attention to the top of the trend line because that's going to pretty much give me my entries for my shorts. All right. And then what we just build it out. So you just kind of build it out. I extend these out, and you'll notice that most of these will you'll start to kind of zoom out, and you'll start to say, "Wow, market look. This is a good example over here. Look at this. Look how beautiful this is." I was actually doing a coaching session during this session. It was Thursday night, and it was great because we were talking about. When the market gives you these opportunities, it always patterns out. It's called pattern. I call it patterning out. Patterns out. It forms a channel, a width. Let's call it a width, and that width eventually is going to, or that channel is eventually going to break, and we're going to have a new channel going in one direction, and that's going to have a little range to it until it breaks, and then we have a new channel. What we do, and what the method does, is identify the channel. We know that channels change direction, so we focus on when they change, the pivot. Our whole job is to identify a channel, wait for it to get oversold on all four stochastics, causing us a quad rotation, all right, or very close to it, because that's going to give us more upside potential, more overall sinking of the markets. When they all come down, that's why I put that yellow line down here. That yellow line is super important because it kind of, I don't want to miss it. I want to make sure, oh, this one's under it right here. Right here is a good example of the first time it gets, I just see it's poking underneath that. And if it's a divergence and it's poking underneath and our lows are all lined up, remember, it's about the 4 or 5 candles here. Let's use this as an example. Look, they pop. Once you start to see these, they're going to be popping all over the place. You're going to see them. This is just this week. I could just go back and I could say, what's our criteria? Okay, 1, 2, 3, or 1, 2, 3. Once you have those 3, you're just dropping that down. The important one is always the bottom one. You just let it go down. And now we're down here. What we have now is and this is going to help a lot of people because a lot of people, even though we're in a real good spot here, you could still say, do I get in on the trend line, John? It's a quad trend line. Could you get in there? And yeah, I said, yeah. What? That's a viable trade if you wanted to take that. But you have to also give it time to finish. It's almost like you're buying the falling knife, right, trying to catch it right at the bottom. You haven't given it a turn up. You're not seeing anything. And what's better to see when you get down here, and I would just give it a couple candles. Very few times it's just going to get away from you. If it comes down really, like it's really far away and it comes down to, we tend to get a bounce off of it. But let it build a couple candles. It doesn't have to be, because it's either going to flush it or go through, but that first bounce is probably going to come back and settle. So start to watch the candles and how they hold that trend line, that 1, 2, 3, and see if those candles are holding that trend. I know it gets real under the microscope here. But it really does work when you start to recognize that these lows are all starting to be at the same level here. I'm not worried about the candles. I'm really worried about the bottom of the bodies. The bottom of the bodies, those lows of the bodies, how they all come in. And seeing this kind of, even if this was maybe just a little bit lower, you could just start to see the low here is a little higher than this, and it starts to turn back up. Right here, that just a little lip right there will give me the confidence to get in here. All right, that'll give me the confidence to get in. That little candle down, see that candle down, and that little lip up right here. Now it moved up a little, and it eventually got up to this point. Now you're like, all right, well that didn't give me a lot. Especially if I got in here, you're not. But that's okay. First of all, when you get that quad rotation. when you get that quad rotation, you're going into a focus zone. You're looking for about 3 or 4 candles. If they start to base out, it's okay. It's okay if something gets away. If nothing sets up and you don't feel good about it, don't take it. Only take it if this sets up. If you have a bunch of bottoms that are all lined up and you have a higher low, that is an absolute trigger that you have to take. Then you put your candle right at the candle low, the candlestick low, as long as it's not a big one. Just give yourself enough room to justify the trade because it should hold up pretty good. All right, once you get that little lip up there and you have a couple candlesticks that are just kind of chopping around, now you got to just take the trade, and that's the easy part right there, all right? The hard part is if you have a bad entry and you don't have enough, you tend to say, all right, well, we're going to break out here. But what happens is we find that we get up against this 80 line on a fast rotation, and then we start going around sideways. We try to go. You're not going to be able to deal with this being in this trade 10 minutes. You're going to be in this trade hopefully 1, 2, 3 minutes, and you're going to get a real fast rotation. And as that approaching that 80 line up there, right as it gets right up against it, I don't even wait for it to, I get it right when it goes. The crickets are popping, the strength is there, you're getting out. You're getting out. And now in this environment here, this candle right here, these candles right here are pretty, that candle right there was 59 and the high was 63. This green candle was a 4-point candle, and then underneath it was a low was 63, high was 60. It was about a 3-point candle. So it was 7 points in those candles. 7 points. I would be happy with 2 points on that trade. You just have to scale up because it's going to work, and you're going to lock it in, and you're going to wait for the next divergence here. You're going to wait for that next channel, but you're going to be focused in because you're down here. This is really where we're focused in. When this thing gets underneath the the yellow line there, which is the 20 line, and we're watching the channel lines. We have 1, 2, 3, and we have 4. And I know what a divergence requires. There's 2 stages to a divergence. There's stage 1, which is a little bounce, and stage 2 comes down and takes out. And that stage 1 and stage 2 is there. Now, I talk about this time because people, when I had to start teaching this, how was the best way to describe a divergence? And basically, it's, let me see, I think I have a, let me go over here a second. Bullish divergence. Yeah, you have the price making the lower low, but the stochastics can make the high and low. What was I going to show you on this? I was going to show you something else that I marked off. Oh, no. I just blanked out there. Anyway, downward channel. Once you establish the understanding of your channels, and you're always looking for channels, and you have this up here, you don't, oh, yeah, I remember what I was going to show you. I was showing you the standard way of understanding the divergence is that low and that higher low. And I always say lows under 20, the higher lows above 20. Just so people could keep they don't start getting chopped up. I want to have that angle, a big enough angle. But if this low down here is all the way down to wherever it is, 6 or 7, and this one's at 20, and it's a real steep angle between this low and this higher low, that's a steep angle. Remember, it's more about the angle. That's actually a good divergence, a 16-degree angle. That's a really good divergence there. And it's inside of a channel. That's something that really just takes, you got to get in that. You got to, right when this thing turns up, as long as you're inside that channel, you have plenty of time to recognize that turning back up and seeing that. You even have another extra candle before it even gets to the top of that channel. It's already on its way at that point, but it's still good. As long as you're inside the channel, So we get back down here, and again, we're back down into a quad rotation here. A quad. It's dropped off. Now what I'm doing is, it looks very choppy. We got a big candle here. Did I have anything else here? No, I didn't have anything else. So I'm looking for that. I'm looking for the bunch of candles that are going to start basing out. And then probably we're not going to notice it until about 3 or 4 candles. And once I start to notice this, and that turn back up, I'll look back over here, and you'll say, oh, all right, Let's watch this. This seems to be putting. You tend to put a couple higher lows in. Sometimes it's a low, a higher low, and a higher low. Here you have a low, higher low, and a higher low. Watch those candles. Those candles will. Anything that comes down and retests the lows and we turn back up is your big trigger. That's your big trigger for that big move. All right. Let's see what else we have here. Actually. The channels. We come down to channels. Here's a quad. It's not really anything. That's okay. That's another important thing. Like that's at 6 o'clock too. So that's the open of the futures. So I'm not going to say that we're going to be doing that. And you got to have some time to sleep and eat and stuff. So I'm not. But the overnight trade. This is not bad when you start to see a upward channel, a downward channel, an upward channel, a downward channel, and you start to see it organized early in the evening. Then you can start to say, well, this is probably going to stay organized. There's something underneath that's kind of keeping this. So you have to take advantage of that. That'll be easy enough to identify your channels. Once you're in, again, what's the rule? Identify the channel. Wait until you get down to the quad. You get down near a quad. I'm hesitant to say a quad has to be, all of them has to be under the 20 line, because you could say that many times we get very close to it and it turns right back up and it's all up and away. It's more important to have that divergence and very close to the quad. But if it has a quad and a divergence, that's a must take. And this is, again, closing prices. Low, much higher low. That's gone. Also a 14-3 divergence too, which is good. That's a dual divergence on that. And divergences inside channels will predict, or that's the sign that a channel will change direction. That's the pivot. That's to change the momentum on that time frame. Downward channel. The momentum shifts underneath. We have a lower low, and we know that's going to shift. Now we have an upward channel. And you probably could even start to kind of measure out this, but that's kind of ugly. I probably wouldn't have gotten that at that point. I'm not super trading that fast. I'm more of a comfortable on the buy side divergence too. I don't know if I would even take that, but if we did break down here, I probably would identify this low, and just kind of just throw that out, because most of the width here is very similar. They tend to give you that same range. Now we can start to add put the pieces together. All right, from that pivot to that pivot. And there's a technique here that I don't want to say invented, but it's just something that I have shown, another great way of understanding channels by divergences. When you have a divergence and you have a low, a bounce, and a lower low, or a double bottom bounce, whenever you have that, those bottoms, let's see if we could explain it here. This was kind of a divergence. You had a low here, and then you had a bounce up to about here, all right? Then you had the pullback, or what we call the divergence low. The distance between the bounce high and the divergence low, or whatever it is going to be the width of the channel, all right? That width is something like, now the hard part is, all right, where do we put, I could give you that width, but do we put the width angled this way? This way, is it going to be a high angle thing? They generally are all in that same 20 to 30 degree angle, depending on, I always say it's about 30 degrees. You can see this is about 31 degrees here, that angle. So that's how I usually put that width. I'll put it at 30, the bottom line will be at 30 degrees at the low, and I'll drop the top one up there. And then when the price gets up there, you kind of actually have an understanding of where that first angle, or the width of the channel is going to be. Now this works all the time too. It's just, here you have a kind of a top. Remember we had this reversal candle here. This is a canceling candle. So you're going to actually get rid of all that. You could actually bring this down and get rid of that candle altogether. And this would be a high level divergence here. It would be a high. It'd be a higher high, it'd be a high, and a lower high. All right? So you have the first pullback and the higher high. The first pullback of the stage one is is the bottom part, and the top is the width, and that's the width of the new channel. So again, if you put that down at a 30-degree angle or whatever, and that width would be this size. Do you see that? So it's the bottom, it's the stage 2 bottom or the stage 2 high, and the first, well, in this, in a short signal here. All right, I don't even do it. I'm probably making it more complicated. The first bounce on a buy side, that high, and the divergence low. The width between the bounce and the low. And it's the width between the pullback and the high on the sell side. And that's the width. That's how you determine the width. And that means you only need 2 pivots. You only need two pieces of the puzzle to figure out the other 2. It's ingenious stuff right there. But now you don't have to wait for a 1, 2, 3. Now you don't have to wait for a 1, 2, 3. Now the width of the channel, you just drop that width in about 30 degrees. You get up here, you're going to run into some issues there. Not to say it didn't, but it kept on going up. But you have a good opportunity usually to get a little pullback. Just a little. That is pretty new stuff. The width of the channel is determined by the divergence, bounce, and the pullback and the highs. Go get them, Johnny. All right, remember, downward channel, we're not really worried about the top. We're worried about more of the bottom, closing prices. Once it gets down there, and if we come down to something aggressively like this, we drop off really hard. We tend to get a big bounce, especially if it's down here like this. But you had to be in front of that. That's at 12 o'clock at night. That's hard to kind of gauge too. But that's actually nice, because that's really nice. I don't see my audio now. Where the hell did it go? Shit. There it is. All right, sorry for that technical difficulty there. I just lost my feed there. Or not my feed. I thought I had to do it all over again. Just remember now, quad rotation. Understand the channel. Once you have the channel, the downward channel, you're worried about the lower channel line. You're taking your trade when you have your quad rotation, and then you have a series of candles or a divergence. That's your best setup here. Again, series of candles. You get down to a quad, you could even start a position there. Maybe take a small position there if you just wanted, if you were afraid of losing the move. But most likely you won't, because like I said, the market tends to retest the lows and really shake people out before going. But we could identify that shakeout. Again, if we could identify just a small little channel and we're oversold. And when I say we're oversold, let's just say that we have a what do you call it? A quad rotation. The quad rotation is what I'm referring to, is where all 4 stochastics are getting oversold, and then we look for a divergence that happens during that time or right after that is that divergence. That is the perfect entry there. That little pullback, that turn back up on that next candle. We're inside the channel. But the thing is, you don't get this little lip when you're oversold, and it doesn't typically fail because you're down here for a while. So the lip is just really the key. You could be down here a while, but when you have the lip, you get a much bigger move. Now this, yeah, it wasn't a tremendous reversal, but in the scheme of things, this is well over our time frame that we're buying the trade. And again, if you apply the rules and you get out, you're going to get out up against the trend line, against the VWAP here. You're not going to miss 2 or 3 points that you could have got. You're not going to be able to do that. You're going to be able to get in good because you know how the entry is going to happen, and then you're going to get off the train, and no questions asked. You're going to take your $200, you're going to pass go, and get the hell out of Dodge. And you're going to wait for that next setup because you're going to be in the zone now. The zone is, all right, I'm in the zone, quad here. Let's wait. Oh, big divergence. We know where that goes. Now with the market here kind of rallying. So this is kind of in a downtrending market when we look for these trend lines. It still could be dangerous. It depends on what's causing the downtrending market. Is it just a standard pullback and a consolidation? That's great. If there's tremendous news out there, you have to watch that we don't flush. If you do flush through some of these and you can just start to feel the VIX is rising and there's some fear in the market, then step outside. Let things get back into an area where you feel comfortable to trade. All right. The market starts to move back up. This is actually, and once you start to see that this is, you could look back here and you start to see that this is embedded. And I probably noticed it around 10 o'clock. I said, well, we got a nice embedded stochastic. So every time you get a pullback here, right here, and this is embedded, that's kind of a flag. Now you did get that big pop and then pull, and a lot of chop there. But that would have been probably a tough area if you think about it. But that's still in that 950 reversal zone. Once it gets kind of a little bit, the chart kind of gets a little older in the day and things tighten up a bit. In the morning, 9:30 to 10:30 is going to be that big candles usually, and then things will tighten up. But when things tighten up, then it becomes easier to see the setups. So this was a nice pullback. We got oversold. This one slipped down under 80. I probably wouldn't have gotten into that. I'd like to see that strength above 85. If it broke under 80, I probably would not take it. It did bounce off of this, though. And not every trade's going to be taken. That's the thing. But this is very good. Once we have a flag, and you have a flag, and you have a lower flag line, you have a low, and then you have a lower low right here. Just a little lower low right there. Right? You have a low and a lower low and a low and a higher low right here in the lower part of the flag. That's a great setup for a flag breakout. Now, eventually, remember, we're on a 1 minute time frame. We don't have an opinion of what's going on in an hour from now. Couldn't care less. I don't even care what's happening in 10 minutes from now. But I want to get that divergence. I want to get that channel out. Just because we broke out of this flag doesn't mean that the trend is going to continue. We could break out and roll over. That happens. That's how you break down out of these flags. You tend to break out and roll over. When people are getting in, we're breaking out a flag, you get back up. But that's why we always buy into the weakness, and we buy into that way we don't have to worry. We're already kind of getting the hell out of Dodge by the time it gets up there. Especially when your 60-10 gets overbought quickly. Again, it got overbought right here. Probably right there at the top of that candle, maybe even the beginning of the other candle. Be realistic. If you trade it inside the channel, you're going to have some money. You need to take that money off because they're going to be better setups. Then you get down here and you can see we had a series of quads. We had a quad here and a bounce and another quad right here and another quad right here, what we did here. All right, there was nothing really here to identify at that point. I wanted to put that in here, so let's take that off. Oops. I just messed something up here. What did I just mess up? Oh, all right, I see. All right. So we had this 1, 2, and then 1, 2. There's usually a pivot underneath it that we use. So that's what I would have used. Just as good. So you had a 1, 2, 3 channel. Now it didn't get all the way down to the channel line, but we did get oversold. And we started to see a bunch of bottoms here, about 1, 2, 3, 4 candles. I do see a little lipper there. It's just a small little lip. And when I say lip, it's a little ledge. It's not a big bounce. But that's the only reason if I see that little lip. And then you take it, I didn't even mention this, you take it right as it's crossing through the 20 line. So you should be able to see the lip, start to try, right when it crosses 20, you get in. All right, you're going to look for a few candles, 2, maybe 3 candles. That's 3 minutes. I've seen candles give you 4 points these days. So you have an opportunity easy to get 2 to 6 points on a trade, possibly 10 points on the trade. When you start to see these, you can actually scale up on your contract size and really adjust how much money you're making and still stay within the reasonable trade and not get, because hey, your days are numbered here, right? You're in a downtrending market. You have a rotation. You're dealing with this. You're not guessing that this is the overall pullback. Don't do that. Get out when it gets up here. Get out. You see it's up there, or even kind of, you might want to short it, but there's no short here because we know that if this was underneath the 20, we had that rotation and was a nice, that would be a much nicer short, even though it did drop here like a rock. It just is what it is. Nice pullback here. Look at the candles all lining up, the lower lows, a higher low, boom, get in, get out. But this is the criteria. Look, right here, a little low, lower low, in, out. Right here, a little, you could see them, right? You could see them. Go through them. There's nothing here. Nothing here. Is there something here? There's a double bottom closing price divergence right here. This is nice. Right here. That was a double price closing price divergence. There's a double, this might have been actually a double price closing price divergence with a follow through. But look, even if you got in wrong, if you got in if you got in long here, long and wrong, late, if you got in late here at this point, and you're like, wow, that thing took, I didn't see the divergence yet. Maybe I see the divergence now on here. You have to watch your 9.3. You could get in and your 9.3, you get a divergence, high level that, and you get in. Just make sure you're not buying your 9.3 when it hits 80. That's a turnoff. That is the biggest flaw out there, that people are not paying attention to this, especially if you're underneath the 200. If you find yourself getting into a stock at the 20 when the 9.3 is above 80, the odds are you going to lose is high. All right, so all these little rules are going to help. But remember, the new one is these candles. If you only wait for that lip, and that the lower lows, and the candles in themselves, the tails tell tale. The tails tell a tale. Not really. I'm not worried about the tails on the first stage of a divergence. I'm only worried about the bodies, and I prefer just worrying about the bodies overall, especially when I'm doing trend lines and stuff. But sometimes a tail will be justified on a second stage when it makes a lower low. It does clear out the lows. So I do look at the tails if it clears out the lows of the whole session. All right, it has to be, that higher low has to be the tail. The higher low has to be the tail. So that's okay. These big tails are okay. We could go in the time machine and just kind of zoom back here. I just zoom out, and we could go back and almost look exactly where that line is, where that quad would be. Does it start a little early? Maybe right about here. But when we zoom in, you can probably see there's a much better divergence. Here. This low and this low. I don't think there was a higher low there. That wasn't. All right. All right, sorry about that. I had a little dead air. I'm going to have to fix that. This one right here, this is something that we have to point out. Now, this happened at about 8 o'clock, and it was a nice little channel down here. Kind of had that divergence high. It's actually probably right around here. Yeah, this high, and then this higher high right here, which was here, right here. And then another push back up right here. And that lower low, which is kind of a running divergence right there. Either way, we come down, we bounce, we come back down, we bounce. I just want to point out this. We actually have, remember, closing prices of the bodies, not worried about the tails here. We have a nice 9.3 divergence there, 14.3, but we also have a 44 divergence, and that's a very good divergence. Again, if you could just trade the 44 divergence, you just don't want to miss those. Now, they do show up, but they show up perfect every time. It is a great move when you have and I'm always looking for them, and they're hard to see because they're not always setting up. Here's one actually here I didn't point out. This is actually a nice one. It's also a 5 minute, but yeah. You're going to get the biggest moves out of these. There's one here, double bottom. When these things show up, oh my God, they're just perfect. You just got to be in the moment. Now, I do personally think the Future Trade Alert Network is the best thing for this trading because I'm in front of the computer all the time. I'll give a plug for that. It's called the Future Trade Alert Network. Now, members of Day Trading Radio automatically get it on their, what happened to this? There it is. They automatically get it on with your membership at Day Trading Radio. It's only $20 a month. If you're not a member, you could get it over at Patreon, patreon.com, and do a search for, or it's patreon.com/Day Trading Radio. All right. I don't know if that thing goes. There's a whole video on it. It shows how to set it up. It's on a walkie-talkie app, and I send the alerts out over the walkie-talkie. Now, these are the alerts that I send out. I send out the quad rotation divergence, the quad rotation coil, quad rotation trend line, quad rotation VWAP, coil divergence, buy-sell divergence, quad rotations, channel breakout stochastic rotations. And so these are the ones I want to send out on those. So these are the most important ones. These are the ones that we want to be in front of it, but what if you're not in front of it? This is what I do every day. I get us in front of these. So you might not be paying attention or just want to trade these setups because you know that they work, but you don't have time. This is the best thing ever. So I don't promote it enough. I'm promoting it now because it works so well with what I teach because the problem is when to get in here. How do I know at 9 o'clock at night there's a great setup? Well, what if I get on the mic here and I say, this is basically what the setup. Let me see if I have one. Let's take a look. This would be something that you would hear. This is a setup from, looks like a setup here.
All right, traders, it is 10:08 a.m., 10:08 a.m. Markets have been selling off earlier today. We bounced at the open. We've gotten up to a point where we've put in a sell-side divergence up here at 67.18. 67.18 sell-side divergence. Your stop would have to go above that recent little candle high, which is up around 67.20 and change. So it's a pretty big stop if you're going to take that sell-side divergence. But this is a nice bounce in a downtrend, so it does look like the better trade is back to the downside at this point.
All right, that would be if I see a sell-side divergence, I'll usually announce the divergence, tell you where you're going to put your stop, and take the trade, hopefully. Now, sometimes I send out the alert. I usually send out the alert and then take the trade, and I'm always late because these things are fast. But this is the fastest way to get these things. You don't want to miss a divergence, a sell-side divergence. What time was that? That was Friday. Was that Friday? 10 a.m.? Right here. That was it, right here. 10 a.m. Friday, the sell-side divergence right here. I marked it off. Look at the move from that. It dropped so hard off of that. Wow, John. Pretty impressive. God damn. Anyway, you can get those on the Patreon site or get it at DayTraderRadio.com. If you go to DayTraderRadio.com, you can sign up for a 14-day trial at DTR.TV/free, or just go to DayTradingRadio.com. You'll see a pop-up. It'll just ask you to make a username and password. There's a lot of good stuff on the site that'll help you get caught up here. Once you get on the site, let me show you what you need to do. Let's go to Day Trading Radio here for a second. Sorry about that. That's the Voxer. We'll go to Day Trading Radio. Go to Day Trading Radio. You can have 14-day free access here. It's pretty easy. Click on that. Just put in your username. I'm already a member, so I can't do it. That's my member type. But just put in your username and password. There's no credit card or anything required. Once you're in, you log in. Now you can see the show. This is where all the trade alerts go out. They get attached to your email and to your text messages and stuff. So we have option trades, the stock trades. I use the Futures Trade Alert Network, which I just showed you, to send out the futures trade because it would take this takes too long to type up a trade on the futures and send it out through an email. And then you get the email, open it up, it's already too late. Remember, we're in these trades about a minute to 5 minutes. So I need the fastest way of getting those out to you. So if you go to the playbook, and these are open to all trial members. You get all this stuff. I have a lot of lessons in here to kind of get you up to speed. The business plan for traders, very important. How to set up your charts like mine. All the templates, if you need the templates or anything, they're there for you. This is a great templates, the NT templates. You want to get the quad rotations stuff, the calculators, the cheat sheets. I give out way too much. These are the setups that breaks it down in this type of format. It shows you exactly what you need for first stage, second stage, what to do, when to do, where to put your stop, etc. That's for the AKA quad divergence, the super signal, when to get out, explaining your exit scenarios, the 2020 bull flag. And now I just actually have a new one here. This is 6 ultimate divergence methods broken down to 6 rules to know during a trade. And these are very important divergence. All this stuff is really great. Not going to waste your time. It's all there on the site. Become a member, support the site. Try it out. 14 days free. DTR.TV/free. All right, that's it for me. I hope you enjoyed the breakdown here. And let's not forget, these setups are here for us. You have to be there for that. They're going to be here coming every day. You just have to make sure you're in front of this. You're in front of this to take advantage of this. The quads, the divergences, it's a perfect match in heaven because it's not going to require you to be there all the time, but you want to be there certain parts of the day. And if I just put that line in where I see that quad divergence, you could see, just looking at the price, where those big levels go. And they all have to be. That doesn't mean that it only happens a few spaces. These big moves, they happen. Big moves. And even if sometimes you're a little early, you usually get saved by these. Considering if you're in the 5 minute, the 5 minute usually gives us a big move. Even though I'm out real fast, you tend to get bigger moves. Anyway, that's it. Have a great weekend. If you need any help or anything, you can reach out to me, DayTradingRadio.com. All right, we'll see you then.